Recessions are where fortunes are made if you know exactly what to do correctly. Warren Buffett has stated himself to be fearful when others are greedy and to be greedy when others are fearful. What he means by this is when the markets are constantly making all-time highs, many assets become overvalued and results in market bubbles, which we have recently seen occur. The imbalance between the intrinsic value of an asset versus its overvalued market price is the result of an overly confident market, or what Buffett deems as a greedy market. This is when you need to be fearful about continuing to buy into the market and further fuel these irrationally high prices. So this doesn't just apply to the stock market. An overly confident and greedy market, flushed with a lot of free money from the Fed, is what gives birth to massively overpriced bubbles like we saw occur in the NFT space. Now, in contrast, when the economy is in chaos and the market is crashing and becomes significantly undervalued, this presents opportunity as you are able to buy assets for cheap and hold them long-term for massive gains. It's during these dark times where people are fearful that Buffett states to be greedy or aggressive in making your moves. Looking back at the 2008 crash, right after was the massive bull run that occurred. In fact, after many of the past recessions, you had massive bull runs after. Buffett himself made huge investments during the last recession and market crash, one of which was getting into Goldman Sachs at a heavily discounted price, which would not have been possible during a regular stable market. And he netted himself in the billions from that one transaction. So let's go through how you can take advantage of this recession through an investing methodology. We're going to first start from a defensive standpoint. When looking for defensive stocks to invest in, think of sectors that involve essential goods and services that people need regardless of whether the economy is up or down. First, the healthcare sector. Even in a recession, people will spend on their health needs, whether that be out of their own pocket or subsidized by insurance companies or the government. Think companies like Johnson & Johnson. They provide a lot of the key medical products people need, such as Tylenol, Polysporin, Reactin, Band-Aids, and many more heavily used products. Or companies like CVS Health. They are the largest pharmacy chain in the United States by number of locations. Or companies like Pfizer, who supply many of the world's life-saving drugs and vaccines. The next sector is consumer staples. Even in recessions, people will need to eat, as well as take care of themselves and their family. Think companies like Procter & Gamble. They create products like Pampers diapers, Charmin toilet paper, Tide detergent, Crest toothpaste, and many more heavily used products. Or companies like General Mills, who produce a lot of the packaged foods people will purchase when eating at home more often during recessionary times. They make everything from Betty Crocker to Pillsbury to Cheerios to Haagen-Dazs and so much more. Or companies like PepsiCo, who obviously produce a lot of the mass-consumed soft drink products you enjoy, but they also own companies like Quaker Oats, Frito-Lay's, and so much more. The next sector is utility providers. Regardless of a recession, people still need things like water, electricity, natural gas, waste disposal, things that keep you alive day to day. Think companies like Brookfield Infrastructure, which is an infrastructure company that operates globally and owns assets such as cell towers, data centers, pipelines, power lines, and so much more. They produce consistent, stable income due to having government contracts. Or companies like American Water Works, which provides water and wastewater services throughout the United States and is again backed by government contracts. Or companies like Waste Management, because even in recessionary times, people need waste collection and recycling done. The next sector is cost-conscious retail. Think companies like Walmart. People often don't splurge as much during recessions and are more cost-conscious and choose more lower-priced options. Or companies like Dollar General or Dollar Tree, which again provide lower-priced goods. Or think home improvement companies like Home Depot. People won't spend as much on hiring contractors during recessionary times and will often do repairs and renovations themselves where they can. Now, as a bonus, if the companies you select also provide dividends, even better, because this allows you to make passive income while holding the stock. But also, companies that issue dividends are considered to be more financially stable and have lasted the test of time. Now, looking outside of defensive stocks and into the broader market, here's the formula to use to select great companies and stocks. First, sector selection. Look for stocks within sectors where society is headed towards and will continue to grow significantly in and receive consistent investments in. Think sectors like cloud computing, data analytics, artificial intelligence, the Internet of Things, information technology, and information security. Second, how to evaluate a company and stock. Once you have identified a sector that is primed for continued growth, you need to choose high-quality companies within those sectors. Choose companies that are already profitable, with year-over-year revenue growth and without a lot of debt, or with debt that is easily serviceable based on their revenue. And third, their stock price has become irrationally undervalued. Once you have found your high-quality companies within growing sectors, look at their stock prices to find the ones that have become irrationally underpriced and undervalued, potentially hitting extreme lows that haven't been seen or reached in recent time. Again, the key is to find great companies within growing sectors that are at a heavy discount. So now, you don't just blindly buy into stocks you have selected, because that would be catching a falling knife. You need to use our advanced top-down price action method to identify exactly where to enter and when to enter with precision. If you don't know how to do this exactly, you'll end up entering at the wrong places and price will continue down afterwards. So here's an overview of exactly what to do. Step 1. On the higher timeframes, such as the weekly and monthly, look for price to reach key psychological areas of value that haven't been reached in recent time. If you're a member, you'll know exactly what we mean. Now, step 2. Once price reaches these key psychological areas of value, you need to look for momentum loss combined with trend change price action on the medium-term timeframes. Starting with momentum loss. Look for the stock you are following to do two things. 1. Start to move sideways like this and not directly down like this. And 2. To create wide swings like this and not tight price movement like this. So after you have your momentum loss, you need price action that signals a trend change. Look for things like wide divergence, a trend change pattern through a higher low or a higher high, consolidation or reversal patterns followed by a break above, trendline breaks, or a break above long-term moving averages where price has been clearly below and not chopping through before breaks above. Now, these are only a few of the trend change price action types to look for. So step 3, you need to go to the lower timeframes and look for precision entry points using our entry strategy and tool, and then to scale in further into your winning positions. Now, even looking back at the last big recession, this here was the market decline. At the lows here in 2009, you had wide divergence, a descending channel break, then a higher high, before you had the biggest bull run of all time. Price action always leaves clues, if you know what to look for. Remember, it's very, very rare to be able to buy into amazing companies at such a discounted price. If you don't take advantage of times like this, you'll miss out on some of the most epic gains. So what we've showed you so far is only scratching the surface. If you want to learn in depth how to actually select high quality stocks, as well as learn exactly when and where to enter trades with precision to not catch a falling knife, head on over to our website at wisetrade.com and join over 150,000 members. Now, we want to hear from you. What is your plan for the recession? What assets do you plan on purchasing? Let us know in the comments below right now. Also, let us know what next topics you want us to cover. As always, please hit the like button if you enjoyed the video, and we'll see you in the next one.